Our next guest is Deven Soni. He is the CEO of Matador Gold Technologies, who is building an interesting product that is combining gold with blockchain technology, and we'll be describing exactly how Matador does this. Welcome to the show, Deven.
Great. Thank you for having me.
You are well positioned to comment on both the gold and crypto markets. As I said before, your product is a hybrid of both markets, so I'm very much looking forward to getting your thoughts on both markets. So let's start by talking about gold and your outlook on gold. As you know, this year, gold has not done very well, but as we've discussed offline, it is outperforming the other risk assets as we speak. Bitcoin, stocks, both underperformed gold, despite the fact that gold is relatively flat on the year. What's holding gold back, though, from really going up to its full potential, if you want to call it that? We have had higher inflation. We have had geopolitical risks surmounting. So what's next for gold?
Sure, absolutely. I think, one of the big challenges in this market where, no one knows what the Fed is going to be doing is people can become, a little paralyzed, right? Especially when you look at your portfolio and you see, numbers that you're not quite used to for the last couple of years. So I think there's just been a giant pause and a breath that people are taking. When you look at, inflation overall, you would certainly expect, gold to have a pretty significant run. But I think when you're looking at just an oversold market, a deleveraging market, even just kind of the flat gold prices that we've seen, excluding kind of the depreciation of dollar, actually is a pretty strong sentiment here. It's not, hasn't fallen. You look in, Canadian terms, gold is absolutely flat from, the beginning of the year. When you look at some of the actual kind of experts and the banks who see, gold at a, $2,000 or $2,400 level over the next year or so, I think that is, an absolute fantastic outcome. Because, I think most people are thinking, look, you look at Bitcoin, you look at Ethereum, you look at, Amazon stock. These are all things that I think people still expect to kind of have a little bit more downside. So even just a flat to, moderate up is still pretty strong in our view. And it's something, the number one rule as an investor is don't lose money. And I think, gold is probably one of the best places to be to not lose money over the next, 6 to 12 months.
And, we were talking about your prior work experience before Matador. You were an investment professional, having worked at firms such as Goldman Sachs. Tell me, Deven, in a risk-off environment such as this year, do people usually flock to gold as a safe haven? In the past, when you've worked at these financial institutions, what did Wall Street do whenever there was panic in the markets?
Well, I think, the panic can come from different places. And, the panic here is coming from, true inflation and an uncertainty of what, the status quo is going to bring. And in these markets, I think people really do flock to gold. They flock to physical assets. Flocking to real estate is a lot trickier in this kind of interest rate environment. So, gold has been a place where, we've certainly seen a lot of, smart people kind of hide and hang out and wait for things to happen. We personally think that, gold is a combination of some, a safe haven in today's terms, but also a place where you kind of want to continue to stock away a bit of wealth, on a daily, monthly, yearly basis. And that's certainly what we've seen continue to happen here as well.
If I were to make the counter argument, Devi, just to play devil's advocate here, that the U.S. dollar has been a stronger safe haven this year, given the strength of the DXY and how that's basically outperformed gold, would you agree or disagree with me?
No, I certainly agree with you that, in the short term, the DXY is up, roughly 15% a year for the year, the same rate that, gold is down. Yeah. I think that, other kind of governments and nations are going to sort of, face a counter to that. And I do think that, as, the kind of exports and imports balance changes, that we're going to see, gold and silver and other metals have a bit of a run here, especially relative to the dollar. So I think this is a short-term decision based on rising rates, but as rates stabilize, I think you're going to see sort of some retraction there relative to gold.
Okay. All right, so you've given your gold outlook. Let's talk about, let's bridge into the blockchain space now. I want to bring up the tech earnings week this week. Brutal week for tech. The big techs wiped out nearly $800 billion. I think Apple's the only big firm that's done relatively okay. You've worked on the tech side before as an investment professional. Tell us what happened this week. Is this firm specific, or is the entire sector just about to see 2001 over again?
I frankly just think there's a whole bunch of uncertainty, right? And I think retail as a whole is, completely, they're going to be in for a tough winter season, right? And that, when you look at Amazon, that's that challenge. When you look at, Facebook and Google, they're so reliant on advertising these days that when people know they're going to be spending less, there's going to be less dollars that go to advertising. So I certainly think that these kind of consumer adjacent, sort of technology stocks are going to be in for a rough winter. And I would probably even suspect that, the winter season is going to be rougher than people are even predicting today. However, I think when you look at kind of broad other applications of technology, kind of blockchain, when you look at the private markets, when you look at the enterprise markets, those are still continuing to invest in this space. So I certainly think that, the adjacency of retail and tech are in for a challenge because of people's concerns about the economy. But, when you look at technology in the enterprise, it actually ends up becoming a source of cost savings and improvement in efficiency. So that's where I would probably be placing tech dollars more so than, Amazon.
When you were working as a finance analyst in the early 2000s, the tech sector back then, the landscape was obviously very different than today. I'm going to just go on a limb and make a statement here. And again, feel free to disagree with me. I would say that today's big tech is so integrated in our lives, we should almost consider them a consumer staple, not so much a consumer discretionary. Think about back in 2000, not everybody had smartphones. In fact, they weren't even a thing. Not everybody was on social media. Not everybody had a laptop. Now these things are so much integrated into our lives that I really can't even think about a life without social media and the technology devices that we have today. And so if you think about a winter or recession, do you think that these tech companies will really suffer in sales as much as maybe they did 20 years ago when the landscape was different?
Well, there's a reason why many of these companies have moved to, sort of subscription models, whether you look at, Apple with iCloud and Apple Care, you look at, Google also shifting as much as they can. So I think when you think about a weak economy, I really don't see a lot of people canceling their Apple TV subscription or their Netflix or their iCloud or their phone, right? Like those are things that are absolute staples and parallels to the economy. But the other side of that is, when you touch, corporations and consumer spending in retail, I see that going down, and that's going to strongly impact the ad market, which a lot of these companies are so dependent on. So, I think the recurring revenue streams of subscriptions are going to continue to be very strong in this economy. But, the ad spend is the one that to me is a big question mark.
Why did retail spending go up during the pandemic in the initial phases, at least? Was it because everybody had nowhere to spend their money except online stores?
I think that's exactly right. Okay. You felt scared to leave your home, so you had to buy everything on Amazon. People discovered they could get everything on Amazon and Instacart, and you saw that spending. And now that's kind of retracted a bit. Plus, I think a lot of people have kind of locked in a lot of their consumables and consumer goods. Right? You can only buy so many pairs of sweatpants. Right? So.
Okay. All right. Well, so you're saying this winter is going to be very different from 2 years ago. So as an investor, then, if I'm watching this show and I'm wondering, Devi, where should I park my capital, if not the tech sector, which is so ubiquitous in our lives, besides gold, where else could I go?
I certainly think that, high margin staple services do make a lot of sense. I certainly feel that, kind of the Rokus and Netflixes are probably a bit too oversold. And I think when, places like Disney as well. So I certainly feel like those markets have a strong recurring revenue sector, a place where people can kind of hide out in a weak economy that don't require, significant discretionary spending. It's really just people, living their day-to-day lives and, kind of the dust of their day-to-day lives is kind of what monetizes these companies. I certainly feel those are places to kind of hang out on top of, gold. We're obviously very bullish.
Deven, let's talk about cryptos now, and we'll lead into Matador. So the crypto space, as you know, has followed the tech space in underperforming pretty much everything else this year. Interestingly, I was reading research, and people have started to notice that Bitcoin is starting to trade alongside gold. There's starting to be a correlation between these two assets, which historically hasn't happened. Is this something that you've observed? Is this normal, or is this just a coincidence?
It's definitely something we've seen, and to me, it kind of goes back to the earlier statement, which is I think a lot of especially retail investors and even sort of institutions are a bit paralyzed in this economy. So there's a leveraging and deleveraging that's happening, and as part of this kind of deleveraging, people are sort of downsizing all of their positions. Things like Bitcoin and have certainly been pretty liquid and easy to downsize. Gold, ETFs, and things like that as well. So I certainly look at a lockstep as being a little bit more symptomatic of this environment than sort of a permanent, sort of shift to stores of value being kind of, balanced.
You wouldn't consider Bitcoin a safe haven asset? You wouldn't apply, would you, or would you not apply that terminology to Bitcoin?
I think that in the short term, no, and in the long term, yes. I certainly just feel that there are not a lot of, just because Bitcoin is a really easy one for people to unload. You look at, the flows of funds to, exchanges, and there's been more kind of, Bitcoin, flowing in exchanges than there has been in many, many years, because even the diehard crypto folks are now kind of running out of their savings, right? Yeah. So the people that used to hold Bitcoin, live or die, the yield, the interest rates are going up. There's more difficulty in kind of borrowing against those assets. So I certainly think that, Bitcoin has a long life ahead of it with great upside, but I don't think that's the case for the next 6 months.
I think all crypto investors are wondering, not just Bitcoin, but all of crypto. But let's just touch on Bitcoin for the next question. When do you think Bitcoin can recover? What is the trigger for the next bull rally of Bitcoin, you think? What macro event do we have to watch out for, Deven?
Well, like everything else, I think people are really waiting for a clear stop to rising interest rates, which will then, I think usher in a lot more sort of inflows back into the economy from people that are kind of just, hiding under the covers. And I think at that point, we see, kind of Bitcoin as being one of the big, alongside gold being one of the biggest beneficiaries of people really getting back into the markets, because, there's no visibility on what's going to happen with corporate earnings. You have no idea what's happening with, salaries as clearly, with consumer spending. But, with these safe haven assets, it's a really easy place to kind of go get outside the dollar.
Okay. And when things do eventually rebound, let's suppose down the line at some point, the Federal Reserve stops raising interest rates. Focusing on DeFi now, Deven, which area or subsector of DeFi do you think has the most potential for a recovery? Which subsector do you think has the most potential for mass adoption in this next bull cycle?
Absolutely. I think the really amazing thing about DeFi and crypto is you've kind of taken, 100 to 200 years of financial history and compressed it into 1 or 2 years in terms of the innovation, as well as some of the downside of the, kind of the scams and the, things like that. But, the one challenge with DeFi to me, the great things have been the innovation. The challenge has been that, often the yields, the inflation, all the promise of it has really just come from inflation and the underlying, tokens that have existed. So to me, the most exciting part of DeFi is when the actual kind of revenue generation component, the yields come from, real world income, real world value creation. So from that, I think the combination of DeFi and, things like real estate, real world assets, precious metals are really the most exciting place to be, because what you're really seeing then is, off-world activity that used to hang out at, kind of exchanges, now moving to the blockchain. When you look at, tokenized gold, when you look at, tokenized real estate, when these are areas, tokenized and collateralized loans that are, collateralizing real world assets. To me, that's the most exciting promise of DeFi, is when you really bridge the real world.
Well, we're going to talk about tokenized gold because that's what you do. But what is tokenized real estate?
So certainly, I think what you can end up doing is taking, create digital securities on top of, real world assets. So you take a piece of real estate, you can put it into a trust or a LLC, and then sell fractional units of that LLC to people. These are certainly kind of more regulated assets, but they are able to, enter the same, world of innovation that DeFi does.
How is that different from a traditional financial product where you have basically a pool of mortgages, for example, put into a security? How's that any different?
Well, I think that the difference is really from the actual kind of counterparty. Here, when you're collateralizing, from real estate, you have a set of fees that can be higher. You have a bank or a REIT or an institution that's behind it. Here, you're able to with tokenized real estate, you're able to really get core access to a specific unit real estate with much lower fees. Creating a public company can cost millions of dollars these days with Sarbanes-Oxley. Launching a token of an LLC, can cost hundreds of thousands of dollars. So I think what that facilitates is the creation of the tokenization of everything, more so than the tokenization of very large properties, very large pools, right? So it's more fragmentation, which I think just benefits kind of consumers and retail investors.
Interesting. And what do you think of the metaverse side of the digital space of blockchain and cryptos? I mean, is this sector of DeFi going to have legs, you think? I mean, Facebook basically just changed, not basically, they changed their name to Meta in anticipation of this new wave that's going to happen. Not Facebook and Meta aren't, it's not the only company looking into this, not the only big tech company looking into this. Do we have, I mean, I've played Sims, it's fun, but I don't envision myself living in the metaverse. What do you think?
Right. It's really funny to me because I feel like in many ways, the internet and the World Wide Web has kind of taken this big 360. So if you remember, the first social network or the first kind of online portal was called Prodigy, right? It was one of the first things out there back in like the mid 90s, right? And what it basically was you were sitting there as a little avatar and you'd kind of walk to your browser, you walk to your email and you'd be able to access these things, right? And then, those things got disambiguated. But now, when you look at where young people, my kids, people in their teens spend their time, they're spending their time in online worlds and interacting in online places. They're buying, online, clothing. They're buying online sneakers, right? Like that's where consumption happens for young people today. And these are effectively metaverses, whether they're, Mark Zuckerberg's metaverse or, the crypto metaverse, not necessarily. But I certainly see a world where, young people, and as they get older, a lot of their spending, a lot of their time, a lot of their attention, a lot of their conversations, a lot of their gaming is going to happen in these social environments, which I still, consider metaverses. So absolutely.
When I was doing my BCom in undergrad, one of my favorite finance profs told us, look, if you've got to invest in something, don't just, let's say you're bullish on Apple, don't just buy Apple stock, buy the Apple ecosystem, buy things around Apple that are building third-party things for Apple. Those things will go up. So applying the same analogy here, if you're bullish on the metaverse, let's assume you are, and you think in the future your kids are going to grow up and they're going to start living second lives in a digital world, what are some of the sub-industries around the metaverse that will also do well?
Absolutely. Well, I think, retail companies that adopt the metaverse early have been a really interesting one for me. So, looking at, places like Nike and Adidas who've really jumped in, entertainment. So you look at artists that are getting their distribution in places like the metaverse, throwing concerts that are selling out and millions of people. Yeah. I think areas like that are extremely interesting. I think, there's also this concept of, NFTs that represent real world assets, sneakers and things like that. These are areas that you can actually participate in today. And in the same way that, Air Jordans from 1990 are worth a lot more than they were today, you feel like these original issuances from, Nike and Adidas and places like this are going to become, valuable as people generate that nostalgia for the sneakers that they, that their favorite character wore in in 2022 in Overwatch or Roblox or in one of these metaverses.
Yeah, just don't buy Kanye West NFTs. I don't think those are going to do well.
Yeah, exactly. I had to stop myself from saying Yeezys, but
yeah, we were both thinking it. We were going to say it, but all right. Let's talk about tokenized gold. So your product, very interesting. I'm curious as to how you transitioned into this space. So tell us about your career path coming from the investment professional space into the blockchain and gold space and what you're trying to build right now with Matador.
Absolutely. So, I grew up in Silicon Valley, and because of that, I kind of fell into the tech world like everybody else. But despite falling into the tech world, I always saw myself as a bit more of a value investor. These crazy speculative tech investments made sense to me, but the valuations never did. But I loved the implementations of technology. I started, my own investment firms kind of back in 2013, 2014, kind of buying, kind of value assets. And with that, I almost, kind of fell into blockchain again, not for the speculative aspect, but for what they could bring the technology and fragmentation. In 2015 or 2016, I was a part of, starting a company called Polymath, which is basically a, tokenized security company, digital assets. So, that's kind of one side of it. And the other side of it is actually, my family personally, they're all kind of first generation, moved to the States. Born in India, all my family were always jewelers. They always looked at their, the store of value as kind of gold under the mattress. And that was something, you'd always, pass off, gold jewelry. And that was kind of the big wedding gift that parents would give you because, you always need to be worth more than it was, early on. So when I saw kind of the potential of gold, and mingling that with kind of technology, that's really what piqued our interest in starting Matador. Because I like as a professional, I was like, well, I still want to add gold to my portfolio, but I have no idea how to do it. Do I buy an ETF? Do I go to the pawn shop down the street? And like it would just be really tricky. So as it became easier to buy stocks, it became easier to buy Bitcoin. I can do all those things on my phone, and 3 clicks on Robinhood or Coinbase. It always stuck with me that buying gold was just so much harder. I didn't know where it was stored. I didn't know where it was held. Like, I don't know what the pricing I'm going to get. So what we really aimed to build at Matador was a streamlined way to do this. A trusted place to buy and hold gold, to sell it, to be able to redeem it, all those things in the same ease that you can kind of buy GameStop stock today. And I was just shocked that something like that didn't exist. So we set out to create it. And, at first, I think when we started the company, we were very centered around, adding all these like DeFi bells and whistles to gold. But I think what we realized was that the biggest problem wasn't, DeFi or NFTs or selling gold on Coinbase. It was just really a broken gold buying experience. So we built, building Matador to say, we want to let people, buy gold in the same way they can buy kind of stocks on their phone, and leverage some forms of, blockchain to do it, like digital receipts to show things are trusted. But the crux of it isn't really blockchain or crypto or that new angle. It's really just making it easier, a trusted, easy way to buy and sell gold.
Actually, as we're speaking, this week is Diwali. Is your family buying physical gold or tokenized gold?
There's been a lot of that. We've got some, got lots of little, all the kids get the little silver and gold certificates that they hope they keep.
I bring that up because you brought up a very important market of gold, or a driver of gold demand, which is jewelry. People talk about gold as a monetary asset, but we must not forget jewelry as a major source of gold demand worldwide, with India being one of the largest, if not the largest consumer of gold jewelry in the world. Actually, as we're speaking right now, news came out of India that Modi is planning to entice private citizens to deposit spare gold with the government. I'm not sure if you're following that story, but it does seem to me like there are several now uses of gold jewelry besides just keeping it in your collection. Do you see a world in which we could monetize our gold jewelry somehow? Maybe loan it out as a collateral, or tokenize gold jewelry in some sort of sense, or marry that with blockchain? What's the future of gold jewelry?
Yeah, that's a great question. I certainly think that gold jewelry can and should be seen as a store of value and not just something decorative like handbags or something, right? But so I certainly think there's a world where a company will go out and say, hey, we're going to go vault this gold. We're going to take it from you. Like I think the challenge is when you have jewelry, it's sort of this thing where you actually kind of want to wear it to special events, but you also want to monetize it and take value from it. And that's kind of the tricky part, right? Especially when the thing that like terrified me was, my parents, store all their jewelry in these safe deposit boxes at banks. But when you go take a step back and you look at, I'm not sure if you followed the story in Beverly Hills where, people kind of raided these safe deposit boxes and just confiscated everything because they said, well, they're concerned that there's criminal activity going on here. So I think when you can't trust the safe deposit boxes, and you can't trust, your safes at home, and there's like increasing crime and things like that. To me, I would sort of want to almost differentiate those two things, just because if you're trusting gold as kind of something that you want to, pass down to your kids and keep valuable, you kind of want to do it in a way that, it's going to be there tomorrow. So I think there's some challenges there, but I love the idea. And, I think my mom would love to monetize that jewelry for sure.
Well, let's go back to Matador Gold Technologies here. So explain the mechanism of exactly how you're marrying gold with blockchain. Is it like a one-to-one reserve? Kind of, you have like a set amount of gold in reserves, and then you have a set amount of gold, digital gold to reflect your physical gold reserves. How does it work?
Sure. So I think the way we're building this is really, step by step. But the first thing that underlies our entire portfolio is like you identified, there's, $1 of gold sitting there in the vault, which is at basically the Royal Canadian Mint in Ottawa to start, and we'll start adding new vaults. But there's $1 of gold, sitting there that represents, dollars on the Matador platform. And when people, buy gold on our platform, it represents $1 sitting at the vault. When people sell, it decreases. So that's kind of the core fundamental underlying crux of it is, every dollar of gold that we're buying and selling is vaulted and trustable, which, I think is tricky to say with other products like ETFs and even some tokenized products. You can't really trust it, but like that's one part of it. And the way we're tying in blockchain on day one is actually adding, sort of digital receipts to every transaction. So, verifiably on the blockchain that you purchased this gold on Matador and that it's sitting in a vault.
Okay. How does the price pegging work? Is there a tracking error like there is with ETFs?
We peg our price to basically a set of feeds of gold pricing, including Kitco as well as some other partners. Right. But we take our pricing, very seriously. And the biggest part of what we aim to do is really remove a lot of the friction from spot pricing. Like if you went to if you go to one of these 1970s websites to go buy gold bars and you see gold is, trading at $1,600, you want to go buy, an ounce of gold, you're going to be out, $2,000, $2,100 after shipping. So you kind of lost money immediately. What we're trying to enable people to do is, reduce that. So if you see gold at, $1,600 or $1,700, that's kind of what you're buying it at Matador. And, there's no storage fees, there's no additional fees. So I think what we're really trying to do is mitigate a lot of the cost and friction of selling gold. And that's another big part of what we're trying to do.
Okay, well, you know what happened with the Luna Terra earlier this year. What was thought to be unpeggable got depegged because of, a lot of issues right now. People suspected it got hacked. But basically, what can you do to ensure this doesn't happen with Matador Gold?
Absolutely. So again, I think the biggest part of what we aim to do here is be a trusted, transparent source. And I think like Terra Luna was transparent, but I think that the problem with that transparency was if you actually kind of look behind the curtains, it was highly reliant on inflation. It was like one token pegged to another. We're very clearly not, we're not hedging our products. We're not, creating financial instruments here. We're really just making it simpler for people to buy gold that's sitting in a vault in Ottawa. Like that's all we do. And that's kind of the first step of it. Yes. There's going to be no, derivatives built and things like that, which can get, it's not these simple blockchain systems that break. It's the humans that kind of try to juice the market, right? And we're not, we're very simply not trying to juice the market here.
Well, a blockchain pegged to gold, you've proven that the technology works, Deven. Let's extrapolate as to what the governments may do with this technology should they get their hands on it. Could we ever see a central bank digital currency tied to a hard asset like gold? Would this be possible? Should it even be necessary?
I certainly think it's possible and probably likely. You've seen the run up in the dollar, and what that's really done is really, hamper other countries' abilities to, set their own monetary policy because they have a, default weaker currency. I think by adding, whether it's a primary currency or a secondary stable product that's backed by precious metals or gold or a basket, I think what that really does is it gives certain central bankers in those regions, another tool in their chest to give them, their sovereignty around their currency and their dollars and their economy back, and it gives their citizens a way to hold something that's still government backed, that can be used to pay taxes, that can be verified. So I think it's almost a certainty at some point, and whether it's going to be a smaller region or a big country that does it, we'll see. Whether it's the Russians of the world or it's India, like I think there's certainly going to be something there, and I'm excited to see what that is.
Wouldn't that be kind of like a return to a gold standard for whatever economy adopts this?
Absolutely. Again, I don't think it's going to be sort of a primary sole currency, because I think you've seen, what can happen when economies go sideways. So you got to go depeg again. So, but I think I see it as an alternate system for a government to do this. So, but yes, I certainly think that people are going to be able to spend these stable currencies in the same way that they can spend, their dollars or rubles or rupees.
Excellent. Well, Deven, I appreciate your thoughts. Thanks for joining Kitco, and I look forward to speaking with you again. Great interview.
Great. Thank you so much.
And thank you for watching Kitco News. I'm David Lin. Stay tuned for more.